Hello, everyone. Happy CPI Tuesday. How's everyone doing this morning? Good morning, John. Good morning, Patrick. Good morning, Jacob. Good morning, Heinrich. Good morning, Royal Palms. Good morning, Rusty, over on Rumble. So, how are people doing? People are still filtering in on Inflation Tuesday. So, we shall see. Good morning, David Atkins with the dollar sign. All right. So we'll see. I had some dental work done yesterday, so it's really sort of painful to talk this morning. Might not be a full length live stream. Good morning, Dean. All right, but that brings us up to speed. So inflation, core inflation coming out 0.3 versus zero point 0.2 prior, in line with expectation. Core inflation coming out higher year over year, 2.9 versus 3.1, and consensus of 3. Hello, Christoph. What else do we have? The headline coming in a bit better than expected, in line with prior, and a little drop than consensus. 2.8 was consensus 2.7, coming in at 0.2 month over month. Prior was 0.3, so that little drop. So mixed, but core and super core was, what was super core coming in? I have to look at this on the screen. 0.481. Super core coming in very hot. But the market's rate cut expectations bounced back to 90% last time I checked. So the market's saying, hey, the Fed's got to cut in September. All right, we got Redbook coming in at 5.7. This is nowhere close. Unless they said their two handle meant a number in front being 2. We have not hit 2%. We've not hit it. That's all I'm going to say. I mean, can they cut? I think they can easily cut once this year, based off just some other rules, but like the Taylor rule. But I don't know, 3 cuts. I think that's a little risky, but we'll see. We'll see, because people want to appease the Trumpster. S&P 500. Everything's up now. It was a mix. Now everything's up. Well, unless you're a long Cardinal Health. Sorry if you're long Cardinal Health. Other than that, everything's green. It's go green, gadget day. Everything's up in terms of sectors. Let's just refresh it. Everything's up with consumer cyclical leading. Fed Watch has 90% for the cut in September, another cut in November, another cut in October, I should say, and then another cut in December. So 3 cuts, back to 3 cuts priced in this year. Still in green mode. Shiller PE 38.37. Little drop after yesterday's pullback. In terms of earnings, really nothing this morning, and not much market moving after the close. So, and tomorrow morning, really not much. That's where we sit. Don't need to discuss that. Hey, Charles. Oh, thank you, Chris. Yep. Yeah, you know what? Dental work's never fun. Dental work is never fun, and I do everything to the best of my ability to properly, and you still occasionally need some dental work. So, no problem, Sterling. Thank you for tuning in. What I am real interested in now is to see if we get the follow through into the open. I think there was the rush, but now we're doing the analysis on Supercore and everything. Inflation, underlying, and you know what? You have 2 camps. Everybody will say, "Look, it's running. Like, we're going to go back to 1970s and bounce back up and have massive inflation again." I don't think that's going to be. Doesn't matter what I think, and I don't think inflation's going away. So I think it's just a mixed bag. The problem is it's getting sticky. Remember how I've talked about it? It's stuck. It's not dropping across the board. Now, if we start getting a huge pullback in housing, that will really drop the headline numbers. However, food is still a mixed bag, especially beef and other stuff. Medical services aren't dropping, but that's not what we're here for. We're here to look at the markets. Transportation services due to fuel and used cars and trucks. There's a couple other things. I don't have them in front of me. Medical care was up. What else do we have? All right, we had the big pop. We had the big pop. You can see here. And now it's retraced. I want to see how this really reacts into the open. We're back down to a pretty key level. This 6420 area, 6420 to 6425. It's been rejected in this area. 1, 2, 3, and even this morning. So we ticked off the 87.5 rule on that pop. If for new people, if you don't know what I'm talking about, when close above the 62.5, the next target is the minor target is 75, but the major target is the 87.5, which we just ticked off. Does that change anything? No, we still have in potential double top territory. What's interesting to me is we had the quick run up and now it's back tracing. I am very interested in how it's going to end up today and if the market's going to reignite the momentum going into the open. So that's where we sit right there. Again, I'm paying attention right where we are, right around this area. 64.20, 64.25. We start getting back above 64.25. Got to go with the upside potential breakout, to retest the 64.40 area. And then if we continue above that, next target 64.57. The pullback I'm really going to be focused on if we lose this run up from the CPI number today, I'm going to be focused on a pullback between about 6,400 to 6,410 for a pullback area. Okay, the next major support is about 63.88. Overall, in the bigger picture, we're still just climbing, holding even yesterday's pullback, still holding the rotation zone easily. So, again, if we run back up 64.40 and then 64.57. The NASDAQ is getting some pressure again above this 23,800 level, spiking up there on Monday, spiking up there today. It's getting some selling pressure and a pretty strong rejection from that level. So, dropping actually back below a minor support level now. So going into the open, this has to regain the 23,772. Then I'm focused on 23.8. If we continue the pullback, there is a minor shelf right about 23.7, and then I'll be watching the 4-hour rotation zone. All right, nothing, unless we fully reverse and close below this trend line. You see this trend line? It's right where the bottom of the 4-hour rotation zone is. So if you don't want to draw that trend line, that's the key level to watch if we were to pull back. Is this a double top? It's too extended over here, especially with 1, 2, 3, 4, 5, 6 bars. And then you rotate it back up again. I'm just watching the bottom of this trend line. If it were to reverse today, watching the bottom of the rotation zone and this trend line. If we did start breaking below that for tomorrow, then my next levels are 23,560 and 23,505. But that's the first warning sign if we lose that. Not saying we're going to, but that's what I'm keeping an eye on because it's pulling back pretty substantially after the CPI print. The Dow, nothing much has changed here. Nothing has changed with the double. You've got selling pressure up above this 44,350 to 44,400 area. It's got to get above 44,400 before I'm interested in anything to the long side, or break down below about 44,050 before I'm interested in anything to the short side. The Russell did, with this spike up, hit the 75, so that invalidates the rest of the targets on the double. So that's done. But also, look at the price rejection here. We're getting a fair amount of selling pressure in. Russell's really got to sustain above 2240, and then it came into a major breakdown zone before. You can see these wicks. You can see these wicks where it keeps getting selling pressure above this 2250 area. So even on a bounce back, I got to use a tight target of just above this 2250 area, and then it's got to really sustain above there before I can remain at all bullish on the Russell. Other than that, can't get overly bearish unless we break below 2215. The VIX started to dump with the print, the CPI print. Again, it's selling volatility now the CPI is out of the way, and it's buying it all. I want to see if that's going to follow through, though, at the open. I'm not thinking volatility is going to pop, but I want to see if it keeps dropping. DAX, testing key support. There have not been a lot of great setups in the DAX, so I'm just being patient. Again, being patient when there's not a lot of great setups. You can see the prior resistance over here. Now testing support. The only thing, I was looking at the DAX today for anything, I'd be watching for this to possibly hold key support. If that breaks, would not be touching it from the long side today. The yields, little dip, and now bouncing back. So definitely a tone change. I'm going to be watching this going in the open, though, because we had the quick dip with that CPI print and the snapback right there. 30-year yields trying to continue to edge back up higher. Is there a great setup in the yields yet? No, not from my perspective. We've really got, for the bull case, besides a little short-term scalpy, it's got to get above this 4.33 again. Crude is getting rejected from the key resistance level. Just above the 64.25, 64.30. As I said, I'm watching for rollover plays in crude. We came back into the sideways into the rotation zone and now breaking down. It's got to really get some momentum below 63, though. And then my next target is about 61.80 to 62 and then 60.85. Gold. Not much going on here today. We got cycles rolling over. We're not yet at oversold. I'm still watching to see a possible bigger pullback or a percent beat buy set up for tomorrow. We don't know if that's going to happen. So far, we might have it, but that's what I'd be watching. Then I'd be watching today's high or any buy pattern that front runs it, with the first target being today's high and then follows through. Silver, not much. Copper, not much. Again, you might have a weekly percent beat buy, so if you're trading this, again, it's long from last week's high as long as it can sustain that level throughout the week. Can't hold it if it does not sustain that level. By the way, I'd be really paying attention to the declining rotation zone. Dollar index dropping against the key resistance. Can see here prior support, tested. Yeah, it was a little mini flattened out double. That's done now. But overall, going to be watching to see if this still holds the 62.5 on a pullback. Going to be watching this to see if it also holds its pullback into the open or if this gets some more dollar strength. What's Sterling putting in here? Can we look at UNH? Yes, we can. What are you putting in here, Sterling? Just reading through a couple things. So just see Sterling's putting some things that's dropped year over year. All right. Well, a lot of the energy has dropped, and a lot of things related to energy has dropped. And this, I'm still watching. Now, we'll get a relief, especially if crude keeps dropping. So, but other things like food, did you put a lot of food and stuff in here? Because I want to know what's going on with the food. All right. Spiders. Again, yesterday's high was 638.95. We're opening just below that. If we take out yesterday's high, the key area, the next key area is 639.50 area. And then if it does break out to new highs, 642.42. On any reversal, I'd be watching yesterday's open for a potential gap fill to yesterday's open, not to the close. 637.46. If we did get the bigger reversal, then would be to the yesterday's close at 635.92, but we're above both those right now. The Qs breaking out to new highs you see yesterday, not yet to the target. Again, key support coming in near yesterday's open and Friday's close. Yesterday's open being 574.69 on any rollover play, and then it would be for the full gap fill. 572.85. Bitcoin, pretty strong price rejection above 120K again. Still trying to build a base against it with the rising rotation zone. So I will watch for breakouts above 120K, but it has to sustain that to turn into anything turning into a hold. We won UNH. UNH, again, we ticked off the 87.5. Yes, there is a wide top potential double bottom in there. But in the shorter term, this technically is just a little corrective flag pattern going into the rotation zone. So we could still easily see another rotation back down. This is not anywhere close to a strong bottoming pattern. Yes, did it pull back enough for a double? It turned into a flagging pattern, though. You can see that right there. And it was not a double. So generally when it doesn't get back to double territory and it does this, it maintains the flag, and I'd be watching for rollover patterns still in UNH. The bigger thing is if it eventually triggered this weekly double, that would be a different story. You are against a very key, because this is something I've been keeping an eye on. You are against a key support area, but there's no short-term strong bottoming pattern from my perspective. This is still a very risky play trying to call a bottom. Meat, poultry, fish, and eggs rose by 2.2% with beef prices of 1.5. Can we get a relief in beef? All right, thank you. Dairy and related products increased by 0.7%. Oh, boy. Yay for the fruits and veggies. Yay for fruits and veggies. That's all I have to say. You're seeing, Rick is seeing a lot of sales on food. Lily's starting to look the same as UNH. No real bottoming pattern. Again, we will get... Lily's even riskier to me. I'm watching. I think I've covered this before. I'm watching closer to the 200 and the 62.5. Any bounces, I'm still looking for rollover plays closer to this area. Then I'm going to be real interested in looking for plays in Lily. Keep in mind, Lily is still very expensive from a PE perspective. Now, I'm not going to purely trade off that, but that's why I'm being patient. Also, we broke below major support. So, and we have a big consolidation area lower. So unless this can regain 600 to 700 area, I'm still watching for rollover plays on Lily. How are new auto prices? That's the Sterling department. What else? We have Tesla with the constant juicing of the calls. There's still this way too risky to short right now. So from longs, I would be less trying to chase this higher at this point. There is some major resistance overhead, but would not be shorting it either at this point. NVIDIA, yeah, we still do have the potential double top. Broadcom, we still have the potential double top. So that's where we sit. Those are the major ones I'm watching. Meta, this is an interesting pattern because it's a sideways correction. You had a little mini double, but now it's extended. Do the count off 1, 2, 3, 4, 1, 2, 3, 4. So it's off the table. But I'm going to be watching this. As long as it can hold this key level, 760, I'll be watching for any strong rotations back up for potential breakout play. If we drop then I'll be patient. But I am keeping an eye on this with so far a sideways correction from the big pop on earnings with the rising rotation zone. Just wanted to point that out to people. All right. Can I check PayPal? Sure. For you, Balaji, yes, I can. PayPal. PayPal does have a potential double bottom. So, was rejected, could not get above the 62.5, only spent a few days above the 200, and then going back down. So, we do have the little mini double. Let's just do the other retracement harmonics. So, it's sort of between the potential buy zone. Would not touch it if it closes below 64.72. This is a potential percent B buy setup above yesterday's high. Could be a front run against the rotation zone, so you got to be nimble for the double. Other than that, that's the only potential bullish setup. If this does break below yesterday's low, I would be very patient. The double is invalidated. If we get below 65, 67, the double is, I should call it, the potential double's off the table. Remember, also from a pure technical perspective, what has happened here? We had a pretty strong breakaway retest of support and the move up. That has now been broken below. Again, we yesterday rejected from that level. That's why I would be patient from the long side. If it did trigger a percent B buy, again, would have to be very nimble against the rotation zone with a tight stop from my perspective, and the trigger for the double 70-17. If neither of those were to trigger, I would not be bullish on this. Especially if it breaks this key low area, because there is still a gap left behind. There's still a technical gap left behind all the way back to the 1st of May, closer to the 62.5 level. So from a long perspective, you have to have some things trigger. From a short perspective, we continue to rotate back down. My next target from a short perspective would be 65.41. So just 65.50 area. All right. So that's where we sit right now. All right, my jaw is tired. I've got to go rest my mouth. Thank you for tuning in. Again, I'm watching this very key area. This very key area, you could, if you're a little conservative, 64.27 area. It's got to regain that and show it can hold that level before I would be bullish after the open. Very strong rejection of that level so far. So it's got to regain that and prove that it can hold that. And then 64.40, 64.57. If we lose that level, I'm watching the bottom of the rotation zone. And specifically, I'm keeping very close eye on the NASDAQ if we do wipe out these CPI gains. Keep a very close eye on the trend line and the bottom of the rotation zone. If the NASDAQ can't at least regain 23,761. You're welcome, Balaji. Thank you for tuning in. AMC after earnings is trading a pre-split adjusted price. Dude, I have not looked at AMC. Oh, boy. Oh, boy. Oh, poor AMC. Poor AMC. What, did they have earnings that actually were zero? Yeah, again, there's not much to see here, but this is... I still want to know how many people are trapped in here. Look at this. I mean, remember? Boom, boom. Look, you can't even see it now. Look at that. Oh, poor AMC. All right. Thank you for that humor today, Sterling. Again, please don't gamble on stuff like this. If you want to learn to trade, learn to trade, but this is just pure gambling. With that, I will leave everybody and have a wonderful day. Remember, not really any earnings tomorrow morning to worry about in terms of market stuff tomorrow. Nothing. We got the mortgage stuff. We got Barkin speaking. That's about the only thing. But is he going to move the market? And we got the crude numbers. And then we got Fed speak. So not a lot tomorrow. Remember, PPI and jobless claims on Thursday, though. And retail sales on Friday. All right. I'll talk to everyone later. Bye for now. Have a wonderful, wonderful trading day.